Well, I've been thinking about something lately, something that keeps me up at night, if I'm being honest with you. I'm 95 years old now, and I've seen a lot of things in my time. I've seen wars, recessions, booms that felt like they'd never end, and busts that felt like the world was ending. But there's something happening right now with the dollar, with our currency, that reminds me of patterns I've seen before, and it's not good. See, I'm going to tell you something that might sound strange coming from me. Warren Buffett, the guy who's been betting on America his whole life, who always said to bet on America, well, I'm making a different kind of bet now. Not against America, no, never that, but against the dollar itself. And I want to explain why. When I was a young man just starting out in this business, I learned something important from my teacher, Ben Graham. He told me, he said, Warren, price is what you pay, value is what you get. Simple words, but they changed everything for me. And right now, the price of holding dollars, it's starting to look like a bad deal. Let me take you back for a moment. Back to when I was just a kid in Omaha. My dad ran a grocery store during the Depression, and I watched him every single day. I watched him worry about money, not because he was greedy, but because he understood something that most people didn't understand then, and, well, most people still don't understand today. Money isn't just paper, it's a promise. A promise that what you can buy today, you'll be able to buy tomorrow. And when that promise gets broken, when governments start printing money like there's no tomorrow, that's when everything changes. Now, I've been around long enough to see this movie before. In the 70s, we had inflation that made people's heads spin. I remember buying a Coca-Cola for a nickel when I was a boy. By the 70s, that same Coke cost a quarter, and people were terrified. But here's the thing. What's happening now is different. It's bigger. It's more dangerous in some ways. You see, after 2008, after that financial crisis, governments around the world started doing something they'd never done before on this scale. They started printing money, massive amounts of it, trillions of dollars. And then came 2020, the pandemic, and they printed even more. Now, I'm not saying they were wrong to do it. Desperate times call for desperate measures. But there's always a price to pay. Always. And that bill, it's coming due. The dollar today, well, it's not what it used to be, and that's putting it mildly. I've spent my entire career, 70 plus years now, looking for value, looking for businesses that compound over time. I always talk about the snowball, right? You find a wet snow, a long hill, and you just let it roll. That's compounding. That's wealth creation. But compounding only works if your money holds its value. If your dollars today are worth less tomorrow, then you're running on a treadmill. You're working harder just to stay in place. And that's what's happening to millions of Americans right now. So what am I doing about it? What's this big bet I'm making? Well, I'll tell you what I'm not doing. I'm not sitting on cash, not like I used to. For years, decades really, Berkshire Hathaway kept huge amounts of cash on hand, billions of dollars. People used to ask me, Warren, why aren't you investing it? Why are you sitting on all this cash? And I'd tell them, I'm waiting for the right opportunity. I want to be greedy when others are fearful. That's still true, but here's what I've learned. Sitting on dollars while they lose value, that's not being patient. That's being foolish. So I've been moving that cash, moving it into real assets, things that hold value when currencies don't. You need to own things, real things. Own businesses, good ones, ones with pricing power. Own real estate if you can. Own assets that produce income, that grow over time, that can't be inflated away. Let me tell you a story that might help illustrate what I mean. Back in the 1970s, during that terrible inflation period, I bought a farm just outside Omaha. It wasn't a great farm. The previous owner had struggled with it, but I looked at it and I thought, this land produces corn and soybeans, and no matter what happens to the dollar, people still need to eat. So I bought it. And you know what? That farm has done wonderfully over the years. The crops go up in price when inflation hits, the land itself has appreciated, and it gives me peace of mind. That's what real assets do. They protect you. They give you something tangible. Now, I'm not saying everyone should go buy a farm. Most people wouldn't know what to do with one. I barely did. But the principle is what matters. Own things that produce. Own things that have intrinsic value. Don't just hold paper promises. You know, I think about my grandkids sometimes, and my great-grandkids. What kind of world are we leaving them if we keep going down this path? If we keep printing money and inflating away our problems, we're stealing from them, stealing their future, their purchasing power, their chance to build wealth the way we did. That bothers me. It really does. But here's what gives me hope. People are starting to wake up. They're starting to understand what's happening. They're asking questions. They're being more careful with their money, and that's good. That's the first step. I'll tell you something else, something I've learned over 95 years on this planet. The best investment you can make, the very best, is in yourself. Education, skills, knowledge. Those things can never be inflated away. They can never be taken from you. Whatever you do, whatever career you're in, keep learning, keep getting better. Because in times of economic turmoil, the people who thrive are the ones who have valuable skills, who can provide value to others. That's something I learned from my dad, and from Ben Graham, and from Charlie Munger, God rest his soul. We lost Charlie last year, you know, and I think about him every day. Charlie would have loved this conversation. He always said I was too soft on gold, too optimistic about currencies. Maybe he was right. But Charlie also taught me something crucial. He taught me that it's okay to change your mind when the facts change. That's not weakness, that's wisdom. And the facts have changed. Look, I'm not here to scare you. I'm not trying to be some prophet of doom telling you the sky is falling. But I am here to tell you the truth as I see it. And the truth is, the dollar is in trouble. Not tomorrow, maybe not even next year. But the trajectory we're on, it's not sustainable. So I'm preparing, I'm hedging. I'm making sure that Berkshire Hathaway and my own family are protected against what's coming. And I think you should do the same. Now, here's the beautiful thing about all of this. Even in chaos, there's opportunity. There always is. Some of the best investments I've ever made were during times of crisis, when everyone else is panicking, when everyone's running for the exits. That's when you can find real value. That's when great businesses are on sale. So yes, I'm worried about the dollar. Yes, I'm taking action to protect against it. But I'm also excited. Excited about the opportunities that are going to come from this, because they will come. They always do. You know, as I sit here in my office in Omaha, the same office I've been in for decades, I think about all the cycles I've seen, all the crises, all the predictions of doom that never quite materialized. And I'm reminded of something important. America has an incredible ability to reinvent itself, to solve problems, to come back stronger. Will the dollar remain the world's reserve currency forever? Probably not. Nothing lasts forever. But will America remain a great place to invest, a great place to build wealth? I believe so, absolutely. You just have to be smart about it. You have to understand what's happening, and you have to own the right things, not cash, not bonds paying 2% when inflation is 6%, but real businesses, real assets, real value. That's been my philosophy for 70 years, and it's still my philosophy today. Let me leave you with this, with one final thought. I've been fortunate in my life, more fortunate than I ever deserved to be, really. I was born in the right country, at the right time, to the right parents. I had the right teachers, the right friends, the right partner in Charlie, and I've gotten to spend my life doing what I love, analyzing businesses, making investments, watching things compound over time. It's been a hell of a ride. But the one thing I've learned, the one thing I want to pass on to you is this. Protect what you build. Be thoughtful about where you put your money. Don't just follow the crowd. The crowd is usually wrong, especially when it comes to money. So if everyone's telling you to hold dollars, to keep your money in cash, to play it safe, maybe that's the time to do something different, to think differently. That's what I'm doing. At 95 years old, I'm still learning, still adapting, still trying to see what's around the corner. And what I see around the corner is a world where the dollar is worth less, where inflation is higher, where the old rules don't quite apply anymore. So I'm changing my bets, not betting against America, never that, but betting on real value, real assets, real things. And I think you should too. You know, Charlie used to say, the big money is not in the buying and selling, but in the waiting. He was right about that. Patience is the investor's greatest virtue. But knowing what to wait for, knowing what to hold, that's the trick. And right now, what I'm holding, what I want to hold, are things that can't be printed, things that keep their value when currencies don't. That's my bet for 2026 and beyond. I hope this helps you. I hope it gives you something to think about. Because at the end of the day, your financial security is your responsibility, not the government's, not your employer's, yours. So take it seriously. Educate yourself. Think for yourself. And don't be afraid to go against the crowd when your analysis tells you to. That's what I've done my whole life, and it's worked out pretty well. Now, let me tell you about something I've been watching in the stock market lately, something that tells me everything I need to know about where we're headed. Energy companies, commodity producers, companies that own real things, mines, oil fields, timberlands. These stocks have been undervalued for years. Everyone wanted tech stocks. Everyone wanted the next Tesla or Amazon. But I've been quietly buying into these old economy businesses because I know what's coming when inflation really kicks in, when the dollar continues to weaken. These are the companies that will thrive. They produce things people actually need, and they can raise prices with inflation. It's not sexy. It's not exciting like crypto or AI stocks, but it's smart. And speaking of crypto, I know a lot of people think Bitcoin is the answer to dollar devaluation. Maybe they're right. I don't know. What I do know is I don't invest in things I don't understand. And I don't understand Bitcoin. Never have, probably never will at my age. But I understand companies, I understand farmland, I understand gold and silver. These are things that have held value for thousands of years. So that's where I'm putting my money. You know, there's another aspect to all this that people don't talk about enough. Interest rates. For the past 40 years, ever since Paul Volcker broke the back of inflation in the early 80s, we've been in a falling interest rate environment. Rates went down and down and down, made everything go up, stocks, bonds, real estate, made it easy to borrow money. But that era is over. Interest rates are going back up, and that changes everything. Higher rates mean higher borrowing costs, lower stock valuations, more pressure on the government to service its debt. It's a whole new ballgame. And most investors today, they've never experienced this. They don't know how to invest in a rising rate environment. But I do. I remember the 70s and 80s. I know what works. The key is you want to own businesses with low debt, businesses that don't need to borrow much, because borrowing is about to get a lot more expensive, and you want businesses with pricing power. I keep coming back to that, I know, but it's so important. If a company can raise prices faster than its costs go up, it wins, it thrives. That's what I'm looking for now. That's what I'm buying. Let me give you another example from my own experience. See if this helps make sense of things. Back in the early 2000s, I started buying railroad stocks. Burlington Northern Santa Fe. Eventually, Berkshire bought the whole company. People thought I was crazy. Railroads? Those are dinosaurs, they said. But I saw something they didn't see. Railroads own their track, their land, their right-of-way. Nobody can take that away. Nobody can compete with it easily. And when energy costs go up, when trucking gets expensive, railroads become more valuable. They're energy efficient, they're essential infrastructure. That's a real asset. That's something that holds value no matter what happens to the dollar. And today, that railroad is worth many times what we paid for it. Because we were thinking long term, we were thinking about real value. That's what you need to do now. Don't get caught up in the noise. Don't chase the hot stocks. Think about what will still be valuable in 10 years, 20 years. I'll tell you one more thing that worries me, and then I'll wrap this up because I know I've been talking for a while. Consumer debt. Americans are carrying more debt than ever before. Credit cards, student loans, car loans, mortgages, everyone's leveraged to the hilt. And when inflation is high, when interest rates are rising, that debt becomes crushing. People can't pay it off. They fall behind. They default. That's when you see real pain in the economy. That's when recessions turn into something worse. So if you're carrying debt, especially high interest debt. Pay it down. Get rid of it as fast as you can. Because in the world I see coming, debt is going to be a millstone around people's necks. It's going to destroy wealth faster than anything else. Be on the other side of that equation. Be the one who owns assets, not the one who owes money. All right, let me bring this home. I've lived a long life, longer than I probably deserved, and I've seen a lot. I've made money in good times and bad times. I've survived crashes and booms. And here's what I know for certain. The fundamentals always matter. Always. You can't print your way to prosperity. You can't spend more than you make forever. Eventually, reality catches up. The dollar is facing that reality now. And as an investor, as someone who cares about protecting wealth, you need to face it too. Move your money out of cash into real assets, into businesses with pricing power, into things that hold value. Do it thoughtfully, do it carefully, but do it. Because the world is changing. And the investors who recognize that, who adapt to it, they're the ones who will come out ahead. I'm doing it. At 95, I'm still adapting, still learning, still trying to stay one step ahead. And if I can do it, you can too. So take care of yourself, take care of your money. And remember, the best time to prepare for a storm is before it hits. Thank you for listening to an old man ramble. I hope some of this was useful to you. And remember, always bet on things you understand, things that produce value, things that last. That's how you build wealth. That's how you protect it. And that's how you sleep at night. Good luck out there. You're going to need it. But more importantly, you're going to need wisdom and patience and a clear head. And if you have those things, you'll be just fine. Take care.